Hello investors. Today is a very special day in the stock markets. One of those rare moments where you can lock in potentially huge returns whilst also being protected from the potential of further downside risk, even in the event of a potential recession. If you're feeling uneasy about the impact of tariffs or global uncertainty on your investment portfolio, you are not alone. But if you're feeling like this, the chances are that you own stocks without any real risk management in place. But here's the good news. You don't have to worry or sit there in fear. Today, I'm going to show you how to embrace this market volatility and actually turn it into your advantage. This strategy is designed to have you smiling during market chaos and not stressing about it. So if you have a conservative to moderate risk profile, let me explain why today might be one of your best opportunities that you'll see in a long time to invest smartly, safely, and with strategy to lock in consistent returns. Today, we are seeing some of the strongest, most well-established companies in the market trading at discounts of over 30% from their recent highs. And while buying individual stocks during uncertain times isn't always wise for conservative or moderate investors, there is a smarter way. I am going to show you how you can add these world-class companies to your portfolio today and generate 10% to 20% fixed income returns per year with built-in protection. What's even more impressive is that you can achieve those returns even if the stocks fall another 50% from their current prices. This is called a protected income strategy, and it's built for investors who want consistent income, peace of mind, and long-term opportunity all at once. Stay tuned, because in the next moments, I'll walk you through why these returns are so high right now, how we can secure exceptional protection while locking in strong returns, and why you must act fast to take advantage of this rare setup today before it disappears. So here are our 5 most attractive protected income strategies that we quoted today. The Magnificent Four, cybersecurity giants, Brazil giants, major sports brands, and AI giants. So let me show you briefly each one, and then I will break them down with more detail individually to show why they are such compelling opportunities. First, our Magnificent Four. These stocks are Nvidia, Facebook, Amazon, and Google. The strategy pays you an income of 13.15% a year in quarterly dividend payments of 3.29% per quarter. This is paid even if the stocks were to fall a further 50% from their current levels. Our AI giant strategy tracks Nvidia, Advanced Micro Devices, and Palantir, and it pays a huge income of 19.55% a year in quarterly dividend payments of 4.98%, again protecting you from further downside in the share price of up to 50%. Our cybersecurity strategy tracks 4 of the largest cybersecurity companies in the world: CrowdStrike, Okta, Palo Alto, and SentinelOne, and offers protection against a drop in the share price of 50% whilst paying 13.7% a year in quarterly dividend payments of 3.44% per quarter. Our Brazilian giant strategy tracks 3 of the biggest companies in Brazil: Banco Itaú, Vale, the mining company, and Petrobras, the largest oil and gas company. Plus, it has the Brazilian Stock Exchange Index, EWZ. It pays a 10% return a year in quarterly dividend payments of 2.5% per quarter, and again protects you from a drop of 45% in the share prices. Our major sports brands tracks Adidas, Nike, and On Brands, and pays an income of 10% a year in quarterly payments of 2.5% a quarter, whilst protecting against the drop in share price of 40% from the current levels. So let's take a closer look at these strategies and why they're so compelling. But before we do, it's important for you to understand how we are able to achieve such strong returns with such high levels of protection and why this opportunity is so time sensitive. When we design a protected income strategy, we essentially are asking top tier investment banks what yield they are willing to pay us based on a specific outcome tied to a basket of stocks that we have selected. The yield offered is heavily influenced by one key factor: volatility. To put this into perspective, if we had quoted the same strategies last week before volatility increased, the return that the banks were offering would have been half of what they're offering right now. Volatility is measured by an index known as the VIX, sometimes also referred to as the fear gauge, which spikes during times of market uncertainty, investor panic, or geopolitical risk. As you can see from this chart, the spikes in the VIX happen very infrequently, on average once every 2 years. And when it does spike, it doesn't last for long. Typically, within a day or two, the volatility has dissipated and the opportunity has gone. That is why it's so important for you to take advantage at these times of high volatility, because they do not last forever. When the VIX is elevated, banks are willing to pay a higher premium for taking on structured risk, which directly translates to higher income for you. This gives us a golden window of opportunity. We can access stocks that are already significantly discounted from their highs, and we can receive an enhanced dividend, which allows us to use part of that excess income to build in protection, essentially buying insurance in case the market was to drop further. In short, the fear in the market is what creates this unique advantage: high returns, downside protection, good entry prices, and exposure to high quality stocks all in one strategy. So if you are a moderate to conservative investor and you want to take advantage of what is happening in the markets right now, whilst having significant protection in case the market was to encounter further problems, then the time to act is now. Please feel free to reach out to us and we'd be happy to show you in more detail how these products work, what opportunities exist right now, and if you would like, we could even design some strategies tailor-made to your personal needs.